It's because that's the way the spread works with brokers. So let's break it down. Hello, good afternoon, and welcome back to Let's Talk Forex. Usually this is the part where I say, as always, I'm joined by Alison, but this week I'm not joined by Alison. I'm joined by Erik instead. Erik, how are you?
Hi, Chris. I'm doing great, actually. Quite nervous because it's the first time you see me on YouTube.
Yeah, no, but it's okay. I mean, Alison, we should say, is very ill this week. So you've decided to step in, and we're very grateful for that. And I mean, maybe tell the audience a little bit about yourself. What do you do for us, Erik?
Yeah, I'm the social media manager at FX Scouts. I'm kind of in the background, let's say, for all the content.
Yeah, and you do a great job. And but you're not really a forex trader. So we thought for this one, we'd start off with something pretty simple, but it's a question that we get a lot from beginners, which is, what is the spread and how does it work? So a lot of people who come into trading, and a lot of people I think who listen to this podcast as well, they already have a good understanding of what the spread is. But so many people they're just like, I don't understand what's going on here. So we thought we'd give a brief rundown of what is understanding the spread, why it's important, and how it works.
So, as you said, Chris, I'm a real beginner. I don't know what I'm doing most of the times. I've tried it, but I don't get the hang of it. And as you said, about spreads, it confuses me sometimes, or as should I say, most of the times, because every time I open a trade, I instantly get in the red. I don't know why. Why do I start losing money?
Yeah, and that's a really good question, and that's one of the main questions we get a lot. It's not because you're bad at trading, and it's not because anything's broken. It's because that's the way the spread works with brokers. So let's break it down. In Forex, so every currency pair has two prices, right? They have the bid price and the ask price. An easy way of thinking about it is when you go to the airport and you're exchanging currency. Like if you're going, flying to the United States, you need to exchange euros for dollars. They're going to buy your dollars at one price, but they're going to sell you euros at a slightly worse price. And that difference between the two, that is called the spread.
So the spread is like the shop's profit margin, I suppose?
Yeah, it's exactly what it is. It's the broker's fee. It's their profit margin. So look, the broker isn't running a charity here, right? They're in it to make money as well. They charge you by giving you a slightly worse price on both sides. And the gap between those prices, that's the spread. And the moment you open a trade, you've already paid it. So it's nice and simple. So you don't even have to worry about it. Though obviously you do worry about it because you start in the red.
Okay. I think I got the hang of it. But how much are we actually talking about here? Is it just cents or does it add up?
Yeah, no, it can add up. But the thing you need to understand here is the difference between major pairs and minor pairs and exotics, right? So major pairs like the Euro USD or the pound to the USD or the USD to the Swiss franc, these are called major pairs. And the spreads are tiny. They're sometimes less than 1 pip. You often see 0.7 pips, 0.8 pip spreads. So if you trade $1,000, your spread might only be about 10 cents. But let's say we have something like exotic pairs. So these are more like the USD to the South African rand, the USD to the ZAR, that's called, or the USD to the Turkish lira, the TRY. Then the spread gets a lot wider in those cases. It can be much 20 or 30 pips. And that can end up costing you a couple of dollars or more on that same $1,000 trade.
So trading majors are cheaper than trading exotics, right?
Absolutely. That's exactly right. And this is why we always say for a lot of beginners, it's not the only reason, but for one of the reasons we advise beginner traders. And I think this is true for anybody who works in Forex, that for beginner traders, you really want to start trading with major pairs because it keeps your costs low. But you need to remember that you pay the spread every time you open a trade, whether it wins or loses. And that's why beginners will often wonder why they start in the negative.
I think it's good information as well, not to panic in the beginning.
Yeah.
But the thing about spread is, what can you do about them? Are you stuck with them, paying all the time?
I mean, the short answer is yes. You are stuck with them. You can't avoid paying spreads completely. Well, you can't afford paying trading costs completely. It's the cost of doing business. It's the cost of trading. But you can minimize them. So there's 3 tips here that I like to give people. The first, as I said, stick to major pairs, stick to the Euro USD, stick to the pound to the USD, or the USD to the JPY, that's the Japanese yen. They are always going to have the lower spreads. Second, avoid trading during big news events. So this is where, like, I'm sure you've heard us talk about this a lot, like, when the Federal Reserve is announcing interest rate decisions, or, when there's a lot of data coming through, because around these times, these news events, you tend to get a lot more volatility. And when the markets get volatile, then you'll see spreads widen. They can widen really dramatically. So you want to avoid trading around news events. And third, and this is a big thing, and it's kind of what we do at FX Scouts. I mean, we're not just podcasters, and we're not just YouTubers, and we're not just social media managers. You want to choose a broker that has consistently low spreads. And this is really important. And today we're going to be showing you guys some charts you can see on the screen. And this is coming from a broker called Pepperstone. They're one of our favorite brokers, and they have consistently low spreads. And if you are interested in having a look at Pepperstone, you'll see there's a QR code up on the screen right now, and there's a link down below. So yeah, that's the third, and I'd say not the most important thing, but in the long term, probably will pan out the most important for you is making sure that your broker delivers you consistently low spreads.
So when looking for a broker, it's kind of like choosing a cheaper shop to buy your groceries.
Yeah, it's exactly what it is. And there's loads of brokers, there's dozens of brokers. I mean, we reviewed, I think 150 plus brokers on our sites, and just like grocery shopping, if you go to an expensive shop over time, those small costs are going to add up and you're going to have less money in your pocket. So keeping spreads low is going to protect your bottom line, and it'll add to your profitability when you trade it. There is a point I do want to make here as well, because we're talking about normal spreads here. There are also accounts called raw spread accounts. And you asked earlier, can you avoid the spread? And with raw spread accounts, you pretty much can. But the difference is, instead of paying the spread, they're going to pass that interbank spread directly onto you. So the interbank spread is going to be 0 pips. You're not going to be paying any spread. You might pay 0.1 pips. You might pay something really small with a good broker. But what you will pay is a commission per trade. So this is a fixed amount of fixed costs when you open your trade and when you close a trade. And for active traders, and for me personally, I find this a lot more useful. I think and it can work out cheaper in the long run. But I think a lot of beginners, they prefer to see the spread. They prefer to see what they're doing. It's easier to calculate costs. And it's really up to you at the end of the day, whether you like to pay your spreads up front from your broker, or do you want to pay a commission yourself? So it's something to consider.
So the spread is why I start losing money. And the smaller spread, the cheaper it is for me to trade. Is that correct?
And that's it. It's that simple. Spreads are one of those costs that, look, every trader pays. It's part of the game. It's part of doing business. But a smart trader, and pretty much all good traders I know, are going to keep them as small as possible. And it's one of the easiest things to control as a beginner. I mean, there's a lot going on in the markets out there, and it's really tough. But if you choose a good broker with low spreads, that's something you have control over. And this is, like I said, why at FX Scouts, when we review brokers, after regulation and security, which is obviously paramount, they're the number one most important things. The next thing we look at is the cost of trading. And we look at these spread costs. And those will add up over time. And when you're just starting out, like I said, they can be the difference between making a profit and breaking even, or even making a loss.
So next time I see that negative number pop up, I'll know that it's not a bad trade. It's just the spread, and it's natural.
Yeah, exactly. It's just part of it. Obviously, you don't want to stay negative. That's the whole point. You want your trade to move into positive territory. But yeah, when you open a trade, unless you're on a raw spread account, you're going to be starting in the negative. But yeah, try and keep those negatives as small as possible.
Thanks, Chris, for helping a beginner like me, and hopefully a lot more just like me with this.
Of course, Erik. No problem at all. And we'll have you on again next time. Maybe it'll be me sick next time, and Alison will be talking to you about some other aspect of Forex trading. But thanks so much for filling the gap, and I'll speak to you soon.